Is DeFi taxed in the US? Welcome to Crypto Tax Made Simple, brought to you by Crypto Tax Calculator. I'm Chris, and I'm here to simplify crypto taxes in the US so you can file with confidence this tax season. In this series, we're breaking down the basics like capital gains and income tax, as well as more complex activities like staking, DeFi, and NFTs. Our goal is to help you so you can hang on to more of your gains while staying on the right side of Uncle Sam. If you've been diving into the world of DeFi, this video is going to help simplify some common on-chain activities and both a conservative and aggressive tax approach. You might be thinking, taxes on DeFi? The IRS doesn't even know about it, so why should I pay taxes on it? Remember, the blockchain is a transparent, permanent record of all transactions that is publicly available forever. The IRS collects transaction data from both domestic and international cryptocurrency exchanges, so they can quickly link an on-chain wallet to accounts on KYC'd exchanges. Don't just throw your crypto through Tornado Cash either. It's easy to trace your transactions to privacy protocols, which might come back to bite you down the track. While there is a lack of specific guidance surrounding the tax implications of nuanced DeFi activities, this isn't an excuse not to report your DeFi activity. There is enough guidance to infer how the IRS may view many situations. When it comes to DeFi, there are lots of different activities. I'll go through a generic example of some activities, and then cover both a conservative and aggressive position. Remember, the aggressive position could lead to a higher likelihood of underreporting and being audited in the future. Let's start with something simple: wrapping tokens. This could be wrapping to move the asset from one blockchain to another, or to use it in a smart contract. The conservative tax treatment would be to treat this like a disposal, triggering a CGT event. For example, if you bought a Bitcoin for $1,000 and then sometime later, when it was worth $5,000, you wrapped it, triggering a gain of $4,000. The aggressive position will be to treat this as non-taxable. The intention of wrapping was not to dispose of the asset, but add utility to it. Now, let's cover something a little more complex: depositing into a smart contract. This could be to earn rewards, stake, deposit collateral, or something else. The conservative tax treatment for this would be a disposal event, triggering capital gains tax. Using a basic example, say you brought ETH for $2,000 and later deposited into a smart contract to earn rewards. At the time it was deposited, it was worth $3,000, triggering a capital gain of $1,000. The more aggressive approach would be able to treat this event as non-taxable. Depending on the exact details of the transaction, you could argue that the intent of this transaction was not to dispose of the ETH, but to use it as a means of earning rewards. Now, fast forward a bit. Your ETH deposit has started generating returns, whether that's in the form of token rewards, interest, or other incentives. It's pretty clear that the IRS is likely to treat these earnings as income, just like interest accrued in a traditional bank account. This income, calculated based on the market value of the tokens at the time of receipt, needs to be reported in your taxable income. It's important to remember that capital losses can only be used to offset up to $3,000 of income per year. This means if the value of your token rewards decreases, you can only reduce the income amount received by up to $3,000. If the token rewards or interest you received was initially very valuable but fell in price over time, you could end up owing more tax than you expected. This situation can be challenging, with some investors owing more in taxes than the current value of their portfolio. Staying vigilant with your tax responsibilities is key to avoiding such predicaments. Crypto Tax Calculator was built from the ground up to handle complex DeFi transactions automatically, so you don't need to spend hours trawling block explorers and battling with manual spreadsheets. Seamlessly import your on-chain transactions, watch our smart tax engine automatically label your transactions, and generate a CPA-approved tax report that can be filed directly with TurboTax or shared with your accountant. DeFi taxation is a complex and continuously evolving area. If you're unsure about anything, consulting with a tax professional is always a wise decision. Stick with us as we break down crypto taxes in the US so you can file with confidence this tax season and avoid having a crypto tax nightmare. In the next video, we're going to cover NFT taxes.